What is up guys, my name is Ignas, welcome back to the channel. So we are looking to find the best stocks from the industrial sector. Already have picks from aerospace and defense, industrial machinery, farm and heavy machinery, freight and logistics. But today I want to take a look into another industry. So for today's comparison we are picking 3 dividend paying railroad stocks. First and the largest is Union Pacific, ticker symbol UNP. On the year to date the stock is down for 14.04%. But zooming out to the last 5 years, there was awesome growth with the stock up for 84.2%. This will be the largest stock for today's comparison at $131 billion US, and the stock is trading at a dividend yield of 2.44%. Now the second railroad name is CSX Corporation, ticker symbol CSX. Similarly to UNP, the stock is down 15.8% on the year to date, and zooming out to the last 5 years it is again almost identical, with the price gaining 87.62%. Though this company is 2 times smaller, market cap at $65 billion US, and we are currently looking into the dividend yield at 1.28%. Now the third pick I have is Norfolk Southern Corporation, ticker symbol NSC. Performance here is again similar, minus 16.89% on the year to date, and in 5 years they did just a bit better, plus 90.51%. This is the smallest out of the 3, market cap at $56 billion, and we are now looking at a dividend yield here of 2.04%. So these 3 will be the names for today's dividend comparison, and to make that happen, let's go to Google Sheets. So I've prepared this table with the tickers for each stock, and for the comparison we'll take a look into 5 different metrics. Dividend yield, dividend payout ratio, years of consecutive dividend increases, 5-year compound annual dividend growth rate, and the current dividend yield compared to its 5-year average. So we'll take the number for each metric and compare them between the tickers. The stock with the best number will get a point for that metric, then we'll sum the points up, and in the end the name with the most points will be considered the winner of this dividend comparison. Price performances for each of these were quite similar, so it will be interesting to find which of these 3 has the best dividend metrics. An early thumbs up would be greatly appreciated, and with that out of the way, let's begin. So the first point that we are comparing is the dividend yield. It is calculated by taking the annual dividend per share and dividing it by the share price. Union Pacific currently has a dividend of $5.20, so at a price of $212.99, we here have a dividend yield of 2.44%. Now CSX Corporation, their dividend is at 40 cents per share, so at a price of $31.22, this is a dividend yield of 1.28%. And now Norfolk Southern, their dividend is at $4.96, so at a stock price of $242.98, this is here a dividend yield of 2.04%. Now for the second metric we are taking the dividend payout ratio. The percentage here shows what part of company's earnings are being paid back to investors as dividends. So with UNP, their dividend payout ratio is at 43.68%, meaning that just over 2/5 of company's earnings are being used to pay dividends. Now switching to CSX, and they have a payout ratio of 20.99%, so 2 times better than we saw for UNP, and they are using around 1/5 of their earnings for the dividends. Lastly, NSC, their payout ratio is at 35.02%, so 1/3 of company's earnings are being used to pay dividends. Metric number 3 is the number of years with consecutive dividend increases. So for how many years the company has been increasing dividends for at least 1 quarter every year. With Union Pacific, they have been increasing dividends straight for the last 15 years. Now if we take CSX, they are just a bit ahead, with 17 years of consecutive dividend increases. And lastly, it seems that NSC is losing this one, because they only have increased dividends consistently for the last 2 years. Metric number 4 is the compound annual dividend growth rate. For the comparison, we'll take the 5-year average, including the next year's estimate. So UNP has a 5-year compound annual dividend growth rate at 11.19%. Now if we switch to CSX, their performance is a bit worse, where their dividend growth rate is at 6.4%. And lastly, NSC, here we again have a double-digit result, with a 5-year compound growth rate of 10.29%. The last metric for today's dividend comparison is the current dividend yield compared to its 5-year average. And for that we'll use my dividend investing watchlist on Google Sheets. So we are now in the tab for UNP, and here we have its dividend yield history for each quarter of the last 5 years. Out of this information we calculate that on average the stock was trading at a dividend yield of 1.93%. So the worst time to get into the stock was back in 2019 at a dividend yield of 1.42%, under the 5-year average for 26.28%. But if we would be getting into the stock right now at a dividend yield of 2.56%, that is currently way over the 5-year average plus 42.9%. So this here will be the number that we are comparing. Now let's take CSX. We have its dividend yield history of the last 5 years, and on average the stock was trading at a yield of 1.19%. So the best time to get in was back in 2018 at a yield of 1.52%, higher than average for 27.37%, and worst one was in the beginning of 2019, 0.93%, under average for 22.07%. But if we would be getting into the stock right now at a yield of 1.36%, that is fortunately over the 5-year average for 13.97%. And lastly we have NSC. Here is its dividend yield history for the last 5 years, and on average this stock was trading at a dividend yield of 1.78%. So we saw the best yield back in 2020 at 2.2%, higher than average for 23.69%, and then worst one was in 2021 with 1.34%, under average for 24.66%. But if we would be taking the stock right now at a dividend yield of 2.15%, that is still very close to the 5-year highs, now up for 20.88%. So we have the numbers for today's comparison. If you would be interested in doing a similar analysis on another dividend paying name yourself, you are able to access this watchlist by following the second link at the top of the description. Otherwise, feel free to add a ticker symbol in a comment below, and I'll consider adding that into the watchlist myself. Maybe you could share some interesting opportunity available in the market that I'm still missing. So we have went through all 5 metrics and the numbers are in. Now we can start assigning points. Union Pacific gets the first point for the highest dividend yield at 2.44%, a point to CSX for the lowest dividend payout ratio at 20.99%, another point to CSX for 17 years of consecutive dividend increases. UNP gets a point for the highest dividend growth rate at 11.19%, and again a point to Union Pacific, where its current dividend yield is 42.9% higher than its 5-year average. So now that we have the points in, we can calculate results. UNP got 3 points, CSX 2 and NSC 0. This means that with 3 points, Union Pacific is considered the winner of this dividend comparison. So we got the pick from the railroads industry. Now looking into my portfolio, we already have 3 industrials names with 3M, FedEx and Caterpillar. So I still need to consider if we do actually need a 4th name in, or if this here is already enough diversification for the sector. What do you think? Are you holding a railroad stock? And should we be adding into it right now? Share your opinion on it in a comment below. Also don't forget to support the channel and leave a thumbs up under the video. Last week I've analyzed and compared several other stocks, so if you are interested in any of these, then click on a video that is currently on the screen. And that was it from my side. Thank you for watching and I will be seeing y'all in the next one.